Hello and welcome, dear investors. Meta stock jumped 20% following the latest quarterly report. Furthermore, the management announced, surprisingly, the payment of a quarterly dividend. What's behind the explosion of the stock price? Is Meta an interesting dividend stock? And most importantly, is the stock still a buy at all-time high? All answers in this video, of course. My name is Thorsten Tiet. It's all about quality investing. We are looking for quality stocks. We are making fair value calculation because we want to know if the stock is a buy right now or not. We want to know if dividends are safe. Everything you want to know if you are an investor. Okay, so let's go. Here is Meta, formerly known as Facebook. Little disclaimer, please don't press the buy button just by watching this video. Make your own thoughts first. First thinking, then buying. Okay, this is the performance of Meta, and you can see here right now stock price is at 475 US dollar. That's much higher than the 90 US dollar the stock had end of November. It's capital gains of more than 400%, and it's really impressive. Impressed or surprised, we are also by the announcement of a quarterly dividend payment of 50 US cent, which means that within 1 year, in 24, you can expect the sum of 2 US dollar dividend payments, which translates to 0.4% dividend yield, which is not that high. It's a big surprise that Meta starts paying dividend because in the annual report 22, they say that they do not expect to pay cash dividends in the foreseeable future. Okay, obviously they changed their mind. They did not change their mind regarding stock repurchases, but let's continue with dividends first. I assume that dividend growth of around 20% is achievable within the next years because the payout ratio is really low. It's basically around 10%. Differs a little bit between free cash flow or reported earnings. And that means that within some years, till 28, I calculated it, within 3 years, you will have a dividend yield of 0.8% based on current stock price. And in 2032, you might get as much as 2% based on current stock price. So you'll need to be a little bit patient to get a decent dividend yield on the current stock price. I think you will not buy Meta just because they started paying dividends right now. At least for me, it would not be a good idea to do so, only because of that. Maybe stock repurchasers can convince you a little bit more. They continue to aggressively repurchase their own stocks. They bought more than 20 billion latest quarter, and they still allowed, because they made a new stock repurchase program starting of January for 50 billion, they are allowed to repurchase 80.9 billion. This corresponds to 6.5% of the complete market capitalization of Facebook and here Meta. And here you see that they have cash of 65 billion, which is really a lot. Not as much as they are allowed to repurchase stocks, but you see here that their free cash flow is 43, close to 44 billion US dollar. So it's really high, and basically they have no debt. So they are debt free. And Meta, when you go back to the performance chart here, you can see that it was a roller coaster right here, Meta, because between end of September 21 and then within 1 year as an investor, you lost 76% of your, they lost this 76% of market capitalization before they made more than 400%. It's really crazy. And this is a turnaround, basically. What happened here is a turnaround. We can see the turnaround also in the fundamental perspective. Meta had some problems, serious problems with declining margins due to a lot of new employees, overstaffing. And they put on the emergency brake late 22, early 23, when they laid off, fired basically nearly every fourth employee. More than 20,000 employees had to leave Meta, and now Meta has much less employees than before. I took a note. Today we have around 67,000 people working on Meta, and it was 20,000 more at the end of 22. Just to give you an idea. And this trend now, you'll see the turnaround here. Margins are growing again. Operating margins are growing again. And not only and the operating income really got a boost, increased by more than 60%. Average revenue per user went up. The number of users on the platforms went up. But also this, it's a more, Meta got a more efficient company. And you can also see it here in the segments. The green segments called family apps was called advertising before. It's Facebook, Meta, Instagram. And right now also Threads, but I think they make no revenue so far. And this is really running well so far. But don't expect that operating income will continue to increase like that. Comparison to last year was easy to beat, and their costs will grow again. Management already told them, because of rising salaries and because of rising investments into the metaverse. Here you can see, I think impressive, in 22 we had sales of 160 billion, in 23 of 135 billion. Although sales increased, cost of goods decreased from 50 to 48 billion, and with general administrative, the marketing expenses and so forth, they also decreased. They are now 22.2 billion, and they have been 25.7 billion before, with less revenue. So you see, Meta got a more efficient company. Anyway, if we look into the segments, you can see here, if you have good eyes, you can discover a second segment, which is called Realty Labs. It hardly makes any revenue compared to family of apps segment, 1.9 million. But the operating margins are really astonishing, minus 850%, which means they are burning a lot of cash. They had an operating income of, let's check here, I took a note, of loss of minus 60.1 billion US dollar. And it seems to get worse and worse. If you look at this, revenues are declining and margins are decreasing, so losses are increasing. So this is not what you like to see normally, but it's a bet into the future. It's a bet into the metaverse, into augmented and virtual reality. You enter this with a gadget like that. And I don't know, nobody knows if it will be a big success or not. So far, it's mostly gamers who are attracted to this. One day, maybe it will also be commonplace to put such Googles before your eyes when you are in the office or in the home office. On the other hand, home office is already a little bit outdated. Many companies call their employees back to office. So I'm not sure if this will work, but obviously right now the stock market is in euphoria mode, and they ignore this risk, in my point of view. Okay, so let's check the valuation. Then we can watch the multiples, and you see that large picture is that Meta got more or less and less expensive. Price earnings as low as 7, even below 7. Now we have price earnings of slightly above 20, which for a growing tech company sounds not too much. I expect earnings growth around 50% for the next coming years to be a realistic number. If we look at the fair value calculation, we may use the adjusted price earnings to do so. And then we have the fair value, and the fair value is this one. This suggests that Meta right now, after the stock got the latest boost, stock price got the latest boost, is fairly valued. But we have here some years where Meta had really high price earnings, up to around 40. And I would consider to more conservatively calculate the fair value, not based on last 10 years, but based starting on the average starting in 2017. And then the price earnings will go down from 23.7 to, let's see, 80.7. And the fair value, which is calculated using the average price earnings, goes down as well. Now Meta gets overvalued, becomes overvalued. And now you'll see that here, if we take the estimates of consensus of 8 analysts for 26, which is 30.88 US dollar, then we have here an expected annual yield of 7.5%. And we skip this one, the estimate for 27. There are only 2 pessimist analysts. So 7.5%. And 7.5%, this is slightly, maybe slightly above the market average. And for me, in other words, it's not interesting right now. For me, the stock price is too high, and this risk-chance ratio due to this segment here, Realty Labs, is, in my point of view, right now rather unfavorable. So I would not recommend buying Meta right now. I analyzed it on my German channel 1 month ago, and there the stock was still a buy for me with the same valuation right now. Now I would not consider buying Meta. What you can do is you can try to buy when the stock becomes cheaper again. For example, when the stock price comes close to 400, because then your expected annual yield will be already around 13%. You can do so by setting buy limit here. You can enter, for example, here 400 US dollar, and then you will get an email when the stock price fell like that. Of course, the stock price can also rise when we have stocks which are overvalued, undervalued. This can go on for a certain time. Of course, Realty Labs can be also the next big thing. We don't know. I just say, in my point of view, for me right now, Meta looks too risky. You might see it otherwise. You can comment. I would be happy to read some comments and to discuss with you. Okay, thanks for watching. See you next time. Bye-bye.